Content is intended to provide accurate information, however, is not intended as financial, tax, or legal advice. Please consult a financial, legal, or tax professional for specific information regarding your individual situation. Opinions expressed and provided are for general informational purposes only and should not be considered a solicitation for the purchase or sale of any security.
Welcome to Game Plan for Retirement with Chris McIntire. McIntire Retirement Services, Northwest Ohio's retirement planning resource.
And welcome into the program. This is your Game Plan for Retirement with Northwestern Ohio's resource for a common sense approach to planning for our financial, our investment, our retirement future. He is president and founder of McIntire Retirement Services. Chris McIntire here with us. And Chris, we always appreciate the time and the guidance. Classes up in full swing, teaching and educating people about all of the challenges we face in retirement and what we need to do to face and address them.
Yeah, Peter. And, one of these days, maybe we'll have less challenges, but the way the world is right now, we have more challenges than ever before, different variants out there now. And who knows what this Omicron is going to end up being here for us. And so far, it looks like the infections are less serious, but it spreads more easily. So maybe it's becoming more like the common cold. And let's hope that, if that's going to be the end result, we can live with that, because there's certainly been far too many tragedies for Americans these last 2 years and people around the globe, to be honest.
Yeah, well, each variant seems a bit of a challenge unto itself and on its own. And we just do our best to navigate personally as safely as we feel comfortable from one day to the next here, as we have stretched this pandemic out for 2 years now, Chris. It's been a continuing challenge to navigate what to do for our personal health and safety, for those around us, our loved ones, those that we come in contact with. But it's equally put pressures and strains and stresses on the financial world. And I know that as we are here nearing the end of the year, even without the pandemic and COVID, there are pressures to get some things done before the end of the year, some deadline driven actions that we need to take. And some of these, Chris, I mean, just with the time that it takes to process, we are already at the last minute or maybe past last minute for certain actions we should be taking.
Yeah, you're absolutely right, Peter. And one of those is, for people to max out their 401k contributions at work. Obviously, they only have so many pay periods to do that. So, if you still have some more money you can put into your 401k accounts to lower your adjusted gross income, then you can certainly do that here. You only have until December 31st on that. Okay. The IRA contributions, those you have until April 15th. So you still have some tax planning there. If you have a health savings account, those you can contribute to until April 15th, your tax filing deadline. For those of you that are wanting to look at Roth IRA conversions, which means taking money from a traditional IRA or a 401k and converting it over into a Roth IRA so that you have tax-free distributions in the future, that's got to be done by December 31st. And I think Peter will agree with me that a lot of our custodians that we use, like a TD Ameritrade and that type of thing, they say, hey, here's the deadline to have that money in. And so, coming up here mid part of December, you probably got another 6-7 days to do that. And then also, Peter, the other big one is some of you have required minimum distributions that have to get out. If you're 70 and a half or 72, depending on the date of your birth there, to have that money that is mandated to come out of your retirement accounts, that has to be done by December 31st, because if you forget to do that, the penalty can be up to 50% of it.
Yeah. And has to be completed by December 31st, not started. And the financial industry has not been absent of some of the delays and the staffing issues and the backlog that many other industries we have seen have been subjected to. And so those deadlines are looming, if not already here. Let's get those processes started for anything that must be done and executed by December 31st, by the end of the year, within this calendar year. Go ahead and jump on those things now if you have not already done so. Procrastinators of the world unite. This is the last minute. So let's go ahead and get on that. And if you need help, if you need direction, if you need to identify whether any of these deadlines apply to you, or if you could be advantaged by any proactive moves, if you can take advantage of any of those proactive moves before the end of the year, call now to McIntire Retirement Services, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris will let you know if there is time to make some strategic moves, or maybe if some of those opportunities do spill over into next year. There are a few that you can make proactively that actually carry over after the end of the year, but proactive planning really is key, ladies and gentlemen. And for all the clients of McIntire Retirement Services, you know that you've been in touch, in communication, and executing on these strategic moves all throughout the year, and have certainly heard from Chris to talk about their importance. So again, if not, pick up the phone, give a call, 800-868-1194. That's 800-868-1194. Chris, being proactive certainly can make this time of year a little less stressful, which we all would appreciate.
Yeah, well, buddy, it is a stressful time of year. And, for those of us in the financial services industry, the end of the year is a very busy time. So a lot of people are, that might be working in a different industry, might be taking an extended vacation. Well, we don't get to do that. We're really hitting the ground running right here because of these end of the year deadlines, following through on distributions, contributions, all these things. And like Peter said earlier, folks, so many of the customer service reps that we deal with are working from home. They're not in the big office structure to say, you know what, I'm going to take this and walk this up to my supervisor and we're going to deal with it. He's going to email it, that type of thing. So, it certainly takes a lot longer right now to get certain things processed, just because of so many folks working from home. And, hey, we adjust to it. It's fine. I don't mind working from home a couple of days a week. I usually do Monday Zoom appointments only. And that's kind of nice, waking up, not knowing I've got to drive maybe to the Perrysburg office or something like that. I can be very effective working at home there.
I only got to dress up from the waist up.
Yeah, those of you looking at me tonight, today I went to a doctor's appointment. I didn't have time to change my shirt before Peter logged on me, so I look like I just came from the gym.
Hey, the information is what is important here, Chris. And for those that do view the podcast, we certainly appreciate that. And wherever you may check that out, most likely on the YouTube page or social media, do us a favor. Click that like button, subscribe to future episodes and more videos. Always great information here on Your Game Plan for Retirement with Chris McIntire. If you're tuned in, you know this and appreciate it. So just hit that like and subscribe. Check in the comments below for important information in the description of the video, links to resources there available very often, or give Chris a call, 800-868-1194. That's 800-868-1194. And as I mentioned, Chris, the classes back up in full swing. You had great attendance for your most recent set of classes. What kind of topics and issues were on the minds of savers and investors there that you were helping them to discover more about, learn more about, and formulate plans to address?
Yeah, well, we do, like Peter says, we do a class called Prepare for Retirement Planning at BGSU Firelands and at Terra State Community College, and then also up in the Toledo market there in Perrysburg. And, we address a lot of the common concerns that people have. And the two biggest ones are, how do I afford my health care in retirement? And then, how do I maintain my standard of living, not worry about running out of money, that sort of thing. And, and I'll give you an example, guys, is, I had a breakthrough COVID case. I went to an unmasked church service and several people ended up getting COVID. And after being fully vaccinated, I had a very mild case. In fact, mine was like a cold. I kept working. I just didn't have people appointments. I did Zoom appointments. That's how minor of a case I had. The other side to that is one of our family members, by marriage, had a death actually at a much younger age than what should have happened. And, so now a 60-year-old widow's got to plan for the rest of her retirement without her significant other, the loss of the Social Security income. They've got to unwind a business. A number of different challenges are coming into play there. So, you have to plan for the unexpected. And Peter, I forget who said it, but, you need to estate plan with your legal documents like you might die tomorrow, and then invest like you might live forever. So that's kind of a pretty good rule of thumb. And, we talk about a lot of those particular issues in our classes on retirement planning that we do. We don't get into specific investment options, things like that. We obviously talk about stocks and bonds and different types of investments, but we don't give any advice. It's purely an educational piece. And I think the biggest aspect of this, Peter, where people get the most out of it is, they get to ask any question that they want to. That maybe they don't want to ask their current advisor, for example, but, in a setting like what we're doing in an educational format, they may say, how do I know if my current advisor is acting in my best interest? He keeps wanting me to do this. They keep pushing me to do this, or, suggesting that I do that, or I brought up something and they killed it, or, killed that idea. So I think it just, it gives people the ability to air things out in the open. And, from a education aspect, I think I do a nice job of, talking about the good and the bad that every investment can have, right? A CD could be a wonderful investment if it was paying a decent interest rate because it's FDIC insured and you can sleep at night, but right now it's not keeping up with inflation. So there are two sides of every part of that discussion or argument, if you will.
Pros and cons, in other words. And Chris, you've always kept a very open conversation on the air that every investment has some drawbacks. Every investment option has some potential benefits, and it's weighing those benefits, those pros and cons, and deciding which selection is the most appropriate to help you achieve a specific goal. That has been the discussion year in and year out, program after program, as we have talked to you about these. And that's really where your services and your responsibility for the best interest of your clients, that fiduciary role, comes into play. Is you help them weigh those pros and cons, explain both sides of that, and then help them come to a conclusion about what option may be correct or what options may be completely inappropriate for specific goals and reasons.
Yeah, exactly. And hey, let's be honest. I think most of us here are pretty rational human beings, and we want to hear the logic, and there can be logical arguments to, living your life a certain way, and logical arguments to living it a different way. Doesn't mean it's right or wrong, So take Social Security, for example. Should somebody take it at 62 or should they wait until 65? Well, I can talk, the pros and cons of both of those decisions. And, it's not necessarily right or wrong because if, since we don't know how long we're going to live, you factor in all of the information you have to make the best decision possible for your particular incident. So for you guys out there, just because your buddy's at the gym or you play pickleball with or golf, just because they took it at 62 doesn't mean it's the right thing to do. We kind of call that whatever the Monday morning quarterbacking is, because, Peter and I both wake up on Friday after Thanksgiving and we look at the stock market. We're like, what the heck happened? It's, it's going to open down 900 points on the Dow. And here it was some other new variant that came out with, and everybody did a knee-jerk reaction. And we saw what happened. And then a huge rally here as we went through this week, as a matter of fact. And, so you can't do knee-jerk reactions. You have to, kind of cut through that. Deal with people's risk tolerances, their emotions, because I think the average American investor, Peter, they get nervous one day because they see red, they turn on one of the business networks and it says market sell-off, right? Because they've got to grab your attention. So they make a decision to sell. The next day, the market goes up a couple hundred points and they miss out on that opportunity. So it's not always about timing the market. It's the time you spend in it. In a well-balanced portfolio around your risk tolerance and what are your goals and ambitions.
But bottom line, Chris, if we have market exposure as part of our comprehensive financial plan for progress, we should expect some volatility along the way. We will incur movements, both positive and negative. And just because of the direction the market has taken over the past decade, it seems like even a minute jitter, and 900 points not being minute, but as far as a percentage, not a big move in the grand scheme of things, and it did come right back. We are thankful for that, but bottom line, we should expect to see that kind of movement along the way, and as part of our plan, just decide how much of our money is appropriate for exposure to that kind of volatility.
Yeah, Peter. And so, there's perception and reality, and sometimes those are the same thing. Here's an example. So we'll use a big number. That's our nice round number. Let's use $1 million, for example. Okay. And if I was going to ask Peter, like, Peter, is $50,000 a lot of money to you? Peter's going to say, of course it is.
Sure,
it's $50,000.
Yeah.
Right. Okay. It probably even means more to Peter's wife, to be honest with you, than it does Peter. And then I would say to Peter, said, okay, would it cause you concern if your portfolio fell 5%? And Peter's probably going to say, no, not really. I can handle a 5% correction. Well, 5% in his case would be $50,000. 50,000 is a lot of money, but 5% isn't a big correction.
Yeah, it's funny how the mind quantifies that differently when you're talking about it those two different ways. The real dollar value seems more significant than the percentage that we talk about in the market, and that's something that we really do need to look at quantifying both ways, Chris, in order to arrive at our true risk tolerance, I would believe.
Yeah, you're absolutely right. And, we deal with a lot of engineers, obviously, and they make very logical decisions and, quantifying the risk that they're taking, if you will, and making a logical discussion. We have some folks that say, Chris, I don't want to know. I want you to take care of it. Here's my risk tolerance. We did a risk profile, and you make some of the decisions. When I need to make adjustments, you make those adjustments for me. So, part of what we help people do is, kind of tailor their investment needs to what they really need. Do they want a lot of hand holding, or do they not want a lot of hand holding? I've got some clients that really like to have a little bit of input into what we're investing in. And, they want to do some individual stocks as some, what we call growth satellites, if you will. They're bullish on financial stocks, for example. So they may say, hey, let's add some financial stocks in here, pick 3 or 4 of the best ones. We'll add that to my portfolio. Other people may say, I'm not worried about individual stocks. I want to be in a broad-based portfolio. And, that's our ability, being independent, that we have to do that. We don't have the cookie cutter portfolios that you might find in the big corporate brokerage world, I guess, is probably my analogy, Peter.
Well, if you don't want a cookie cutter approach to your planning, pick up the phone, give a call to Chris McIntire, McIntire Retirement Services, Northwestern Ohio's resource for that common sense approach to planning. Take a look at your portfolio, your investments, your retirement accounts, the plan that brings all of those tools together, and talk about your goals and how your dollars are working to help you achieve those. 800-868-1194, the number to call. That's 800-868-1194. Now, the type of planning review and the plans that Chris will help construct and put together for you, those can easily be valued at $1,000 or more, several thousands of dollars. But Chris McIntire, for radio show listeners, podcast viewers, waives all costs associated with this initial review and strategy session. No cost, no obligation, just a chance for you to get direct answers to specific financial questions and guidance on how to address specific financial risks and issues. 800-868-1194. Again, the number to call, 800-868-1194. Chris, another one that a lot of people have not quantified, but that can be quantified, is our tax liability into the future. Now, we don't know maybe specifically what exactly is going to happen with tax law and rates and brackets, but you do a lot of work helping people to map out what that potential tax is going to look like, and then talk about, well, if there are changes, if tax rates and brackets and the tax environment does change, as has been talked about, here's what could happen with your dollars in the future. Oftentimes right now, we're seeing that if those changes do occur, which some of us expect that they will, that we would actually end up keeping less of our money. And that's another reason why it pays to be proactive now.
Well, Peter, that's a nice way of telling me I'm a tax geek. I'm okay with that.
Self-proclaimed. I mean, you've said it before, bud. Yeah.
Yeah, self-proclaimed. And, there is legislation that has been proposed right now as part of the, whatever they're calling it, the Build Back, whatever. Some of this some of the new spending and packages that the government wants to do is going to raise taxes. In 2026, income tax rates will go up for almost all Americans because the tax cuts that President Trump initiated will have expired, and taxes will go up if that legislation doesn't get renewed, because those things are only good for 10 years, right? They're not permanent. No tax bracket isn't permanent. They do it for 10 years, basically. So, knowing what the tax rates are now, not knowing what they're going to be into the future, knowing how big the deficit is, knowing how the government finances that through taxation or they reduce spending. I don't think anybody out here has heard them whisper reducing spending, fixing Social Security, fixing Medicare. The only way they get to do that, and I'm going to say this, is through the confiscation of our money through taxation.
Yeah.
Okay?
Yeah.
So
now I've seen some
some
scare tactic kind of email marketing around that, Chris, and people concerned, oh no, the government's going to lock the doors, shut the gate, put the bolt on, and then steal my money. That's not the way that this is likely going to happen. It's likely going to happen, but through slight increases over time in tax rates, they essentially accomplish the same thing with much, much less resistance.
Yeah, you're exactly right, Peter. Right now, our tax environment is so favorable for people to be doing some proactive tax planning and not knowing what the future is going to be, listening to the rhetoric we're hearing from the representatives out there. That can always change. We call it legislative risk, right? And one of those things that has been legislated was the Secure Act in 2019 that said, if my dad dies and I'm the beneficiary of his IRA, I have to empty that entire account within a 10-year time frame. Previously, I used to be able to stretch that out over my remaining life expectancy, which could be 30 to 50 years, depending on how old the beneficiary is. So that's an example of legislative risk.
Well, again, ladies and gentlemen, all factors that play into your progress and your confidence in planning for your financial future. Chris McIntire can sit with you, have these discussions, give you specific direction, guidance, and help you identify strategies that will work effectively to help you achieve and accomplish your important goals. The money's there to support it, but you got to put it to use in the right way. Give Chris McIntire a call, because that's the side that he can specifically help with. 800-868-1194. That's 800-868-1194. In the home stretch of the program here, Chris, in the home stretch of the year, are there any other items or reasons why you hear from people around this time of year looking for that guidance, that help and assistance?
If people have non-IRA type accounts, and with the market volatility we've had, if they have some significant losses in there, so they bought 3 stocks, one of them is really down in value, we may have them sell that stock to lock in that loss and use that loss in the future to offset potential capital gains taxes. So realizing a capital loss to offset a realized capital gain in the future, we call that tax loss harvesting. That's very important as well, buddy.
Strategic moves that you can make, or at least be aware of, to consider and identify when they would be appropriate for you, ladies and gentlemen. taking advantage of even a loss is possible. You've got to know when and where and how strategically to do that. It may play an important role in helping you make the most of your financial progress this year. Many of us have seen quite significant gains due to the market, and we're thankful for that. But if there are some positions at a loss, we may be able to offset some potential tax implications from that. So again, these are the kind of year-end planning things. But Chris, I imagine as we are shifting the calendar page, flipping to a new year, a lot of people just want to have that sense that they have a solid plan in place, or maybe looking at the question or looking for an answer to the question of when can I retire? Is next year that year, and need a plan in order to do that?
Yep, you got it, Peter. And it's nice having some of the modern software, the Social Security illustrations and things like that at our disposal, the ability to break down portfolios to make sure we don't have a bunch of overlapping holdings from one mutual fund to the other. And I shouldn't say that we do that, when we have new clients that come in, how we break down their current asset structure.
You can get a better understanding of your portfolio, your investments, and your plan for retirement, how all of the pieces come together, work that puzzle, complete the picture. That is the comprehensive planning process, and looking at things in your investment portfolio, from the risks that you're taking, the fees that you're paying, the taxes that you may be liable for. All of that is part of that initial review, that planning strategy session. All you need to do to take advantage, pick up the phone, give Chris McIntire a call, 800-868-1194. That's 800-868-1194, 800-868-1194. Chris, maybe looking into retirement, somebody has worked a full career, they have put in the time in their full-time job. They aren't looking to become a full-time financial professional as a moonlight career. They'd rather just sit back and enjoy their time. And that's why they would come and speak with you, to rely on your expertise and your guidance in that area, so that they can more just enjoy life rather than having to pay attention to that constant news cycle.
And it takes, time and effort and resources and, decision-making ability, how to troubleshoot, take the emotion out of it. And it's very hard for people to do that. Think of what a husband and wife go through to buy a new vehicle at the car dealership, Now think of the decisions they have to make in regard to their retirement, and, if they've been incredible savers and have an unlimited amount of money, that's one thing. If it's, if it's where we don't have a lot of room for error, that's where our role becomes critically important, I would say, Peter.
Well, there is a lot of in between, and there is a lot of issues on either side of that. There are a lot of issues that we need to make sure that we have addressed, planned, and prepared for: the risks, the issues, the opportunities financially to help improve our outlook. Those can be identified with the help of a experienced, qualified professional with a trained eye. That's Chris McIntire, ladies and gentlemen, your resource. Pick up the phone, give a call, 800-868-1194. That's 800-868-1194. Going full circle as we began the show, there are many items that you should be taking care of before the end of the year. For many of these, that deadline is here, ladies and gentlemen. We are at the last minute, specifically for some of the proactive tax planning, or to fully fund some of those employer-sponsored retirement plans. You need to be looking at that now. So if that is something that you want to accomplish before the end of the year, call today. But if you want to start next year on the right foot, you need to have a plan in place for that as well. Give Chris McIntire a call. Either way, your resource, 800-868-1194, 800-868-1194. And Chris, we always appreciate the time and guidance that you provide.
My pleasure to be with everybody today. Stay safe out there, folks. Thank you for listening.
Visit McIntyreRetirementServices.com for many additional valuable resources, including other great episodes of Game Plan for Retirement with Chris McIntire. Be sure to subscribe.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookstone Capital Management, a registered investment advisor.
Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.
Any comments regarding safe and secure investments and guaranteed income streams refer only to fixed insurance products. They do not refer in any way to securities or investment advisory products. Indexed or fixed annuities are not designed for short-term investments and may be subject to caps, restrictions, fees, and surrender charges as described in the annuity contract.